When we put things together, we make sure it becomes better. It's all about going beyond. We design spaces where you can live your life, enjoying today's modern comforts. And tomorrow's unique luxuries. Your home is in the middle of a neighborhood propelled by progress. At the heart of Bridgetown, the destination estate where the passion for life radiates. Live a life beyond compare in a place that inspires victors. The Valaris Residences. Unrivaled.
Good morning, and thank you for being with us today. My name is Kevin, and welcome to this latest Lamudi webinar series episode, Joint Venture Projects and What Makes Them Lucrative to Investors. This webinar is done in partnership with RHK Land. RHK Land is a joint venture of international property powerhouse, Hongkong Land, and Philippine real estate giant, Robinson's Land. Today, we are joined by two real estate experts. They will be sharing their insights on joint ventures and how this partnership makes properties highly lucrative to investors. Today, we have with us Mr. Chee, Chief Representative of Hongkong Land, Philippines, and Mr. Joey Bondoc, Associate Director, Research Division, Colliers, Philippines. Welcome, and thank you both for joining us. All right, I'd like to start with you, Chee. I understand that Hongkong Land has many successful joint venture projects all over Asia. Please tell us about these projects and what makes them successful.
Morning, Kevin. Thank you for the introduction. Hongkong Land operates across the region, addressing local needs through teams on the ground across Hong Kong, mainland China, and Southeast Asia. We partner with local companies as well as foreign developers, depending on the nature of the projects or investments, and also subject to other requirements in each city. In the Philippines itself, we have several joint venture companies established for the past 25 years, and we have launched multiple phases for some of our projects. We continue to invest in the Philippines since 1996, when we first established our joint venture company. And throughout the years, we have received very positive feedback from our satisfied buyers and also happy partners. I believe these buyers have trust in our brand, confident in the quality they can expect from our projects, and also probably the concepts of our projects that we introduce, which may be different from what they used to see in the market.
Thank you, Chee, for sharing that. Now to Joey, from your perspective, why do you think joint venture real estate projects with international firms became very popular in the Philippines? And how have joint ventures affected the real estate landscape in the country?
Hi, Kevin. Definitely, joint venture projects are very popular in the Philippines because most investors and users in the Philippines are really drawn into and are attracted with all these foreign projects. You have upscale amenities, and Filipino buyers enjoy the fact that these foreign developments are also being offered here in the Philippines. That's why over the past few years, we've really seen a very good demand for these joint venture projects with foreign developers. You have, for instance, the architectural designs and precise construction, as well as engineering standards being implemented in local projects here in the Philippines. And these are just some of the factors that really entice local investors to invest or acquire these joint venture projects. And as I mentioned, over the past few years, this has really been a stable source of demand in the residential luxury upscale condominium market. And this is the trend that we're likely to see moving forward.
Understood. Thank you, Joey. Chiho, given that Hong Kong Land has several partnerships in the country, do you have any other further thoughts on this?
Well, we collaborate with different strategic partners, each sharing our own expertise and strengths, and strive to differentiate each individual projects differently, either concept-wise or in the product itself. With the aim, of course, to deliver new experiences to our buyers. Hopefully, we have brought a positive impact to everyone.
All right, thanks for sharing that, Chiho. My next question is, again, for both of you. What do you think makes joint venture projects lucrative to investors? What are the unique benefits of owning property developed by an international firm? Let's start with Joey this time.
Well, the fact that these joint venture projects are strategically located in major business districts in Metro Manila, we have been seeing that here in the capital region. And this is one of the major reasons why we're seeing a very good demand for these joint venture projects. And as I highlighted earlier, Filipino investors are enticed by the fact that these developments are with foreign developers. So really, Filipinos are enticed by the upscale amenities, architectural engineering standards provided by foreign developers. So we believe that Filipino investors and end users will continue to be attracted by all these upscale features being offered by these joint venture developments here in Metro Manila.
Okay, thank you. Chiho, do you agree?
Yeah, certainly. And to supplement what Joey has mentioned, the joint venture projects benefit from the foreign partners' vast experiences, their expertise in certain market segment, and of course, their standards that will be observed. And not forgetting the support and shared learnings from other projects in other countries. With the local knowledge of these local companies combined with the foreign partners' experience, you are likely to witness a different approach in developing the project, which will benefit all stakeholders.
Right, understood. Thank you, Chiho. Okay, now let's talk about a bit more on the Villaris residence, the joint venture project of Hong Kong Land and Robinson's Land. Chiho, please tell us, what are the major contributions of Hong Kong Land to the creation of this project?
Okay, at Hong Kong Land, we actively participate in all our projects, and the Villaris Residences is no exception. We are very involved from conceptualization of the project until to date, as we have started construction. We continue to monitor and provide input to the team. Our Hong Kong Land local and also regional team continue to support our JV team to ensure our buyers get the best experience. Hong Kong Land was very particular in creating the design of the Villaris Residences. We wanted to focus on the experience for the residents, and this is why we adopted an intentional design philosophy for the Villaris Residences. We have also ensured that Hong Kong Land's decades-long experience and learnings will be applied in the creation of the project. Apart from design, we pay special attention on the quality of our projects and actively work alongside with our partners and also the JV team on the ground to ensure our deliverables are within expectation to all our stakeholders. Last but not least, we'll always see how we can value add and improve on our projects as we progress.
Okay, thank you for that, Chiho. All right, now moving forward, in the Moody's Trend Report Indicators of Growth, where to invest in 2021, it was reported that the 9 million to 12 million or upscale price range showed the most growth in that period, as the number of leads rose rose by 89%. This is followed by the 20 million and up range and 6 million to 9 million range, which posted 77% and 71% growth respectively. Colliers also forecast the residential sales to be driven by mid-income and luxury properties for the next 12 to 24 months, as cited in their Q1 report. My question here is, why do you think luxury properties have been particularly resilient during this recent recession? Let's go with Chee first.
Right. Buyers looking for luxury properties are often looking forward to more spacious living, low density environment, have good amenities and facilities, property that is well managed and taken care of by professionals, and of course situated in a good location, near to all the conveniences that one looks forward to. Some of these factors are important considerations to the buyers, and they would not hesitate to buy when they identify a good project meets their requirement despite this challenging time during the pandemic. Likewise, for the Volaris residences, we have been receiving good response and encouraging feedback from our buyers regarding these attributes of our project.
Okay, gotcha. Any thoughts on this, Joey?
Definitely, I agree with what Chiho said. These luxury as well as upscale projects are strategically located across Metro Manila. They are located within the busiest business districts in Metro Manila. So definitely the rental prospect is there, the potential for capital appreciation or price increase is also there. They are near the infrastructure projects implemented by the government. They are within bustling business districts where you still have major outsourcing companies, BPO companies occupying office spaces. And as we always say at Colliers, we believe that it is the upscale and luxury residential condominium segments that continue to derive a stable demand, even during times of economic crunch, whether it's Asian financial, global financial crisis, it's really the upscale to luxury, even ultra luxury condominium segments that continue to attract a stable demand in the market. And this is a trend that we're likely to see beyond 2021. Of course, this is the segment of the property market that is awash with cash and is practically shielded from a major global economic crunch. So definitely, this segment, the luxury and upscale, will continue to be a major driver of the residential market in Metro Manila. In fact, over the past few years, we've been seeing this price segments driving nearly 70 to 80% of total demand in Metro Manila. So that's a pretty encouraging figure as well.
Yeah, looking good for the luxury properties. Thank you for your thoughts, Chio and Joey, on this one. Now, let's move on to my next question. Again, directed to the both of you. Now, many investors would echo how unnerving it is to procure properties during this crisis. In your opinion, should they consider investing in joint venture projects at this time? Let's start with Joey this time.
Definitely, because, as I mentioned, these joint venture projects are very attractive, even with global economic crunch, recession that we are seeing right now. And we believe that even with some disruptions in the economy and property, it's the joint venture projects that will really continue to drive demand in the residential market. And as I mentioned, Filipinos, investors or end users will really continue to acquire and invest in these joint venture developments because of a lot of factors. They're strategically located, they're within business districts that are still welcoming a lot of BPO occupants and even multinational corporations. So the leasing prospect is definitely there. And again, because of the location and proximity to infrastructure projects, the potential for price appreciation will also be there. And we believe that moving forward, investing in these joint venture projects will really become more popular. This is a trend that will really redefine the demand in the residential market moving forward. So this is something that we expect and project for the property market beyond 2021. It's really the upscale and the luxury segments, especially those that are joint venture developments that will continue to remain popular here in Metro Manila.
Thanks for your thoughts, Joey. What is your opinion on this, Chee?
Well, last year was quite a challenging time for everyone in the Philippines due to the economic recession as well. But for 2021, I'm sure Philippine economy is primed for recovery, offering unique opportunities for real estate investors whose needs have been reshaped by the pandemic. As the economy reopens and vaccination programs are being rolled out, confidence of investors will rise again, and they will look into developments that offer the greatest potential to grow in value. So I believe with the pandemic going to be over soon and things are under control, things will look up again.
Okay, all right. Thanks for your opinion on this, Chiho. Now, my next question is, because prior to the pandemic, as we know, the Philippines has been considered an attractive investment destination in the region, specifically in Asia. Do you think it's going to be a continuing trend, or do you see any shift brought about by the pandemic? Let's start with Joey.
Well, as I mentioned earlier, and as Chiho also stressed, the pandemic has disrupted the country's economy and property, but the growth prospects are definitely there. We believe that beyond this pandemic, the Philippine economy will grow at a much faster pace. And another major plank of that recovery is the infrastructure program of the government. And these are just some of the factors that we believe that will contribute to the Philippines still becoming a viable, feasible property investment destination beyond 2021. And we believe that there will be a pent-up demand in the market. That is why the Philippines will continue to become an attractive property investment destination in the region. You're correct, we saw this pre-pandemic. There was some disruption during, at the height of the pandemic. But I think in terms of growth prospects and prospects for recovery and rebound, definitely the Philippines is on the regional radar, will remain on the investment radar of a lot of foreign investors, especially in the region, in the Asia Pacific region. But not only that, we're already seeing green shoots of recovery in the property market. And we're starting to see that in the residential sector. And we believe that a lot of investors and users are really looking at the properties to invest, especially as they anticipate a faster rebound for the Philippine economy and property beyond 2021.
All right, sounds positive. What about you, Chiho? What are your thoughts on this?
Well, the Philippine economy is very resilient, as we have seen during the Asian financial crisis and also the subprime financial crisis. The country always bounced back much stronger. And with the country's 110 million young population, highly literate, and with a strong domestic consumption, this creates a demographic window that translates into a strong, robust market over the medium and long term. This, coupled with the government's infrastructure projects initiatives, will serve as a growth engine and pave the way for sustained recovery. And with many of the infrastructure projects that has been underway despite the pandemic, and the completion dates are within sight, it will probably become a catalyst for further growth in those surrounding areas. With the economy growing again, hopefully back to pre-pandemic levels soon, we'll see property values to continue to appreciate again. Emerging business hubs, such as those along growth corridors, would stand to gain the most and offer enormous opportunities for those long-term investors looking at a 10 to 15-year horizon. Another compelling reason to invest at this time is that property prices, especially in the new growth areas such as in the Pasig and Quezon City, have not yet really skyrocketed, thereby offering good upside potential for investors.
Understood. Thank you for your thoughts on this, Chee. Great. Now, moving forward to our last question for today, and this is also the part, I guess, where you could, share your last words. Now, the pandemic has reshaped, as Chee and Joey actually also agreed on earlier, it has reshaped the market's requirements, with discerning investors opting for features that are found in high-quality properties. Tell us, what do you think are the most, or rather the foremost requirements of our buyer right now? Let's start with Chee.
Well, for any property investment, most importantly is a good strategic location. I think that matters most. Proximity to the international airport, good accessibility to highways and transportation links, near to all the conveniences, hospitals, schools, and commercial areas. These factors differentiate those high-value properties from the rest. Following the pandemic, investors are showing a preference for probably into smaller cities with proximity of one's residence to the office, to reduce their traveling time. And not only that, when you work from home, your home has actually become your office as well. Functionality of your homes emerge as an important consideration, with investors seeing condos as not only a home, but also a place where they allow them to work comfortably from home. Hence, having units with the right layout and space, good ventilation, natural lighting has become important features that one look for. And in addition to getting access to open green spaces or facilities that promote living. And for investors who will look for properties that give them good rental income or capital appreciation, properties located along growth corridors tend to benefit most, considering the government's infrastructure program, which aims to link all these emerging growth centers and spur further development for the new ones.
All right. Thank you very much for that, Chee. Joey, your thoughts on this one?
I definitely agree with what the Chee mentioned. Location, still very important at this point. So it's not just important that you're located within major business districts in Metro Manila, in our near office towers and BPO multinational locators, but also it's important that you are near the infrastructure projects lined up by the government. You have toll roads, expressways, airports still being modernized, and this will be completed beyond 2021. And we believe that these infrastructure projects will help dictate the pace of recovery beyond 2021. And these are just some of the factors, of course, that investors are considering as to which property to acquire, which condominium to purchase. And also they're looking at the leasing prospects. Will they be able to lease out the condominium unit once it is completed? Will it be a source of passive income? So aside from infrastructure, aside from the location and leasing prospects, of course, a lot of investors are also looking at payment terms, attractive payment terms being offered by developers. And at Colliers, what we have observed is that even with ultra luxury and upscale projects, these condominium units are doing well even despite the pandemic, because as I mentioned earlier, these are the segments of the property market that are practically shielded from the debilitating impact of a pandemic. But these are the property segments where you have a very good demand coming from investors that have long holding power and are awash with cash and are, of course, looking for attractive payment terms in the market. So these are just some of the trends that we've been seeing in the market. And we believe that the pandemic has also raised the need to be in a condominium unit that is spacious enough for you to be able to carve out your own home office. And not only that, of course, these condominium units should be adaptable to work from home scheme. They should, of course, have a steady, reliable internet connection. So all these features are now being considered by a lot of investors and will help dictate the demand post the pandemic.
All right, thank you, Joey. Really interesting and positive forecast for the luxury market for buyers and investors. Now, all right, thank you very much, gentlemen. That actually concludes today's episode on joint venture projects and what makes them lucrative to investors. This webinar was done in partnership with RHK Land. Today, we heard from Mr. Chee and Mr. Joey Bondoc. If you have any questions, please feel free to place your questions in the comment section below or contact RHK Land directly. Once again, I am Kevin from Lamudi, Philippines, and thank you so much for watching.
Thank you, Kevin. Thank you, Joey.
Thank you, Chee.
Chee.
Thank you,
Thanks,
Joey.
Kevin.